The $95K selling. Why this breakout could be huge. Bitcoin has been quietly holding just below 95K, but this might not be just a pause. It could be your last chance before the next big move. Whales are buying. Retail is still asleep. Big players are accumulating quietly, while most retail investors haven't even noticed yet. So the real question is this the calm before the storm? I don't think this is just a bounce or a temporary spike. ETF inflows are heating back up, and long-term holders are quietly stacking. Hey everyone, Neil here, welcome back to the channel. And look, I get it. This market can be confusing at times. That's exactly why I do this, to break things down and track the key signals week after week. If this helps you stay grounded and ahead, consider subscribing so we can keep following the cycle together. In today's video, we are breaking down Bitcoin's latest move around 93K, and why this range could be a key inflection point, especially for short-term holders. We are not just watching price. From ETF flows to liquidation heatmap, macro shifts to whale accumulation, this isn't noise, it's a setup. This could be a pivotal moment in the cycle. Let's not miss it. Alright, now let's get into it. Bitcoin is currently hovering around the 93K level after a brief dip below 92K yesterday. But here's the key. That dip didn't break the trend. It retested a major support zone and bounced. So once again, Bitcoin is holding up. And if Bitcoin can stay above it, signals that short-term holders are back in profits, and that often builds momentum. Meanwhile, ARK Invest is turning heads with their latest reports, projecting a Bitcoin price of 2.4 million USD by 2030. Is that extreme? Maybe. But what matters is why they think that. Institutional adoption, ETF inflows, and long-term fundamentals. And a big part of those long-term fundamentals? Global macro shifts. Let's talk about that. Right now, hopes are growing that the US-China trade conflict will ease. That optimism drove major inflows into tech stocks yesterday, pushing all three major US indices higher. President Trump says he's in daily negotiation with China, though Beijing hasn't exactly confirmed that. He's also publicly pushing for peace talks in the Russia-Ukraine conflict, but saying Crimea is still out of reach. So why does this matter for Bitcoin? Because when global tension eases, investors get less defensive. They shift from safe mode to risk on, meaning they start moving money back into growth assets. That capital doesn't just go into stocks. Some of it flows into alternative assets like Bitcoin. But here is the difference. Stocks move on earning reports and company guidance. Bitcoin moves on liquidity, uncertainty, and macro positioning. It's not just following tech stocks anymore. It's being used as a hedge, a bet on currency debasement and long-term store of value. Bitcoin's correlation with the Nasdaq is falling. You can see on the graph there at 0.33. And its correlation with gold? Rising, now at 0.60. That means investors are starting to treat Bitcoin more like a macro hedge, not just a tech stock proxy. We are witnessing a slow decoupling, and that's important. Yes, both Bitcoin and stocks are rising, but they are rising for different reasons. Stocks are climbing on earnings relief and tech recovery. Bitcoin is climbing on M2 expansion, ETF inflows, and its emerging role as a geopolitical hedge. What we are seeing isn't just a bounce, it's the early stage of a decoupling. And in a high-stakes macro environment like this, that shift could be a game changer. Now, let's talk ETFs. We have just seen over 960 million USD in net inflows into Bitcoin spot ETFs over just 2 days. That's one of the strongest ETF inflow surges on record. And yes, we are expecting that momentum to continue for at least 4 sessions in a row. Now, what does on-chain data say? Here's where it gets tricky. One top analyst pointed out that Bitcoin's latest pump happened without a surge in network activity. He called it a ghost town rally. What that means is no new users are flooding in yet. This move is being driven by ETFs and futures, and that could mean it's vulnerable. But again, this is all part of the setup. Short-term holders are taking profits. In fact, in the past 24 hours, over 47,000 Bitcoin moved to exchanges, a multi-week high in profit taking. That's creating some selling pressure. But long-term holders? They are soaking it up. Since January, short-term holders have sold 460,000 Bitcoins, Long-term holders have bought 635,000 bitcoins, and that's 1.38 bitcoin for every bitcoin sold. This is smart money at work. Short-term traders trend to buy high, sell low, and repeat the cycle. Long-term whales are accumulating. Now, let's look at the fundamentals. The number of Bitcoin deposit addresses on exchanges has dropped to its lowest point since 2016. Investors aren't sending Bitcoin to exchanges to sell, they are holding. And exchange outflows? Still climbing. Net flow indicators are rebounding after bottoming. This usually signals a pre-rally phase. So even if price action is slow, the fundamentals are quietly bullish. My point here, even if the price action looks sluggish, but under the surface the setup's building, and this is usually how big moves start. Whales are waking up. Let's take a look at the Bitcoin order book, Heatmap and CVD. We can see a sell-off wall at 95k. Traders are paying attention if this level will be broken in the short term. When we look at the CVD, we can see the largest brown whale is continuing a wait-and-see mode, no clear move yet. Meanwhile, the red and green lines are showing a steep sell-off, indicating strong selling from mid-sized wallets. The purple and orange groups seem to be entering a cooling-off phase after earlier selling pressure. As a result, we can see the sell-off is more dominant in the overall order volume. That said, there are some bullish signals from on-chain data. Wallets holding over 10,000 Bitcoin are buying, with a buying score of 0.9. 1k, 10k Bitcoin whales are also buying, with a score of 0.7. Even 101k Bitcoin wallets are flipping positive. Retail is still selling, but whales are scooping up the dip. Let's take a look at the liquidation heatmap. Over the past 24 hours, Bitcoin started trading around 92.5k. In the early afternoon, the price dipped to about 92k, but quickly recovered and climbed back to 93.5k. Around 9:30 p.m, Bitcoin broke out and spiked up to 94k, then spent several hours consolidating between 93k and 94k. Early in the morning, Bitcoin made a strong move higher, reaching 94.5k. This area, between 94k and 96k, shows up as a thick yellow band on the heatmap, highlighting a major cluster of short liquidations. After hitting this resistance, the price pulled back and dropped to 93k. As of the latest data, Bitcoin is trading near 93.2k. The heatmap shows that 93.5k is a key resistance level, with a heavy concentration of short liquidations stacked above. If Bitcoin can break and hold above 94.5k, the next resistance is around 96k. On the downside, support is visible around 92k, 93k, where long liquidations are clustered. Key levels to watch now: resistance 94.6k to 95k, still the main liquidity selling. A breakout above here could trigger a new wave of short liquidations and push toward 96k or even 98k. Immediate support: 92k to 92.3k, held well during the last pullback. If this breaks, next downside levels open up. And deeper support: 91k to 91.5k. Historically an important absorption zone, now acting as the second line of defense. Critical downside zone: 89k to 90k, the final strong support visible on the map. If price breaks down below 91k, this is likely where buyers will step in again. In short, Bitcoin remains in a compressed range between 92k and 95k, with clear pressure building on both sides. A clean break above 95k could lead to a breakout rally, while a fall below 91k would likely trigger deeper long liquidations. This isn't the mania phase. Not yet. Retail is still mostly out, but whales, institutions and governments are stepping in. ARK Invest says Bitcoin could reach $2.4 million by 2030. Is that crazy? Maybe. But remember, the internet looked crazy in 1995 too. So, to wrap up, Bitcoin is consolidating, volume is climbing, whales are buying, and ETFs are inflowing. Yes, there is resistance at 95k, but every cycle needs a breather, and again, this isn't just noise, it's a setup. So now, the question is this the calm before 100k? Let me know what you think in the comments. Is this the breakout moment, or is it one more shakeout incoming? Smash the like, subscribe and stay tuned. This is Neil, stay sharp, stay informed, and I will see you in the next one.